Hello, everyone, and welcome back to session number 7 of Business Analysis series. And today we will talk about how to forecast the top line of a company. Broadly, in theory, a lot of students actually read about these concepts like top-down approach and bottom-up approach. I'm so sorry, but they have never done it on a real company. And when we actually go and try to apply that after reading in our theoretical, college or a professional degrees curriculum, unfortunately, we are not able to apply that because you don't have, tremendous understanding of the business first, and you end up directly doing the forecasting of a company. So although we are talking about how to forecast the top line of a company, every fresher and capital market professional need to understand this, that till the time you have not done an exhaustive understanding about the business model of a company, it's very difficult to build assumptions. History is not equal to future. So you cannot be like historically company 10% may grow kari to future may be karegi. That's just pure lazy work. And if it would have been that simple, boss, everyone would have made millions and billions in market. And that's not the fact, right? So I have again, so this is all the block number 106, and this is our session number 7. I have divided this blog into two aspects because we need to talk about two approach, right? The top-down approach and the bottom-up approach. So this session will be purely talking about the top-down approach, the basic dynamics of top-down approach, and the upcoming 4-5 sessions would be pure play around how to understand the future forecasting, especially related to revenue of a company. We'll talk a lot about per capita incomes, penetration levels, how to analyze that, industry sizing to market share to companies revenue. We'll talk about bottom up approach, asset expansion leading to top line, etc. Okay, so the conclusion is the destination, that is what I want to communicate. The destination of every business analysis report that you read is nothing but broadly deriving the future forecast of a company, right? Because why do you analyze a company? Why do you analyze a business? Whether you are a venture capitalist, a equity research analyst, or a investment banker, basically you want to make money from money, right? And you make money from money by buying something which is undervalued according to you. In order to judge undervaluation, you need to forecast the future cash flows of the company, right? Only then you can discount it back to derive the valuation of a company. And the future cash of company is determined by the top line of the company. So the buck strikes right here. Can you have a firm grip over what can be your company's future top line? Majority of analysts they go wrong in the top line assumption. They are either very aggressive or either they are very conservative when it comes to understanding top line of the company. Okay, so that's the broad thinking why we thought about writing a blog on the same, and why we thought about conducting this session on this topic. Okay, so let's directly jump to the top down approach here. So the premise of top down approach is pretty simple. So I will do one thing. I will zoom out a bit now. Okay, so that the entire image comes here neatly. All right, so see, this is the entire image of a top-down approach. What you need to broadly do is you need to understand what can be step one, the future industry size of your industry, the industry in which company operates. So for example, if we are at point 0, we need an idea about, let's say 3 or 5 years down the line, right? If your industry is worth 10,000 crore today, at what growth rate can it go? So you can calculate the future industry size. Okay. Then you need a firm grip over the market share of the company. Let's imagine your company's current market share is 10%. That means your company's current revenue is 1,000 crore. What strategies your company is applying on product innovation, on distribution front, etc., that they will be able to capture a high market share, right? You need estimate of that, because when you multiply the future industry size by the expected market share, you get the expected revenue of the company, right? Then your company might be making, right, operating profit, that is EBIT, or profit after tax, PAT. So you need a very solid assumption about the future margins of your company. So let's imagine the current PAT margins of your company are 10%, leading to a PAT of 100 crore on a 1,000 crore top line. You need a detailed understanding of the company's cost structure, marketing expenses, depreciations, right? Your cost of goods sold. In India, it is called as cost of material consumed technically, right? Research and development cost, power and fuel cost, other expenses, taxes, interest, which are connected with capital structure, about the future. Okay, so let's imagine you end up, there are also concepts like financial leverage, operating leverage. We'll talk about them slowly and steadily in the upcoming 30, 40, 50 sessions of business analysis. We'll cover everything. Okay, but this is just, basic. We are just at session number 7. So let's imagine you expect the company to clock a margin of, let's say, 15%, right? You need that assumption here. So you get part of the company. Okay, this is a broad step. Now there are also further steps here, like from PAT, you will have to deduct the reinvestments that the company will have to do back into the business in form of capex and working capital, and finally you get the free cash flow of the company. So this is the number. This free cash flow is the number that you discount to find the valuation of the company. So you see here, everything starts from the top. Now this is top-down approach. It's not that, theory वाला definition, economy से sector कैसे grow करेगा, sector से sub sector कैसे grow करेगा, उससे company कैसे grow करेगी. That is okay. That is theoretical definition. This method from industry to company's PAT, this is broadly called as the top-down approach by practitioners. So this is what, is the broad ecosystem of a top-down approach, if I talk about. Okay, now let's see it through a live Excel simulation here. I think this was a session I conducted around, let me just close it. Just 1 second, guys. Yeah, I hope you all are seeing the Excel sheet of Zomato. So this is a session that I conducted approximately around 2.5 months back. 3 months back actually, where I was taking a case study of Zomato, and the session was broadly on how to value young loss-making companies which are coming up with IPOs. And this was the case study that I took. The idea for this particular Excel format came to me by reading Mr. Aswath Damodaran's blog on Zomato. For people who don't know, is Aswath Damodaran, he is legend of valuations. You should go and definitely read his blog, Musics and Market. He's a valuations and corporate finance professor at New York University, a Stone Business School. One of the best guys in market to understand valuations about. And yes, Michael Mumbusin also, another legend who has covered a lot about company analysis and valuations. You should definitely read Michael Mumbusin's book, Expectation Investing, which covers in detail how to do forecasting of a company and derive valuations of the same. The latest edition has been published this year itself. Please do read that. So see, the basic concept that we did right now while we were using the screen of the forum, let's try to apply it in an Excel, right? So see, these are the few parameters that we need to jot down first. Okay. These are the few parameters. We will cover till here. Okay. I just want to show you one particular year. I don't want to confuse you more. This is again, we'll take it step by step over a period of time. This is the gray mount region is the only thing that we'll be talking about right now. So we need to put this particulars in Excel. The growth, that is practically the industry growth rate we are talking about. Okay. So we get overall market, we need share of market. Because this was an e-commerce company, there's a concept called as gross merchandise value and gross operating value. We'll come to that. revenues, then operating margin, income, tax, PAT, reinvestment, free cash flow. So let's go about it. So point zero means the current. What is the current industry size, etc. Right? And these are all the forecasted number. So first thing first, you need a detailed understanding of at what rate your industry can grow. Okay. So if you go here in the details tab, I will take you here. Okay. So this is broadly derived by, a lot of calculations. So this is what I meant by, okay, I will teach you a lot of things about the penetration levels, the per capita income, the demographics of country. That is called using primary data to forecast the industry size. But because this was Zomato, right, the industry overall, food, ride, online industry is practically growing at 25-30%. And the market is very clear, right? For the upcoming 2, 3, 4 years, they can, comfortably keep on growing at 25%. I'm using comfortably because I know the math. That is why I'm using the word comfortably. I think this is session number 7, right? So in session number 9 and 10, we'll talk about how to exactly get this growth rates. Okay, for timing, just take it as a number, 25%. Now, you have the historical industry size, the current, that is 22,500 crore. See, I have connected a formula here. That is nothing but equal to old industry into bracket open. That will be 1 plus the growth rate. Okay. So you get the expected industry 1 year later. That is the overall market size. Now, basically in e-commerce companies, this is basically a transactional value just in e-commerce companies कि इतने हजार करोड़ का फूड ऑर्डर होगा, राइट? तो इसमें आपका शेयर कितना होगा? So the current market share of Zomato was 42%. Now, if you understand anything, bit about network effects, right? Network effects are phenomena where basically more users attracts more supplier, and more supplier attracts more buyers. So that is why it becomes very difficult to break that platform. The platform which attracts more user attracts more supplier. Now, because you have more supplier, you have more users. So in such kind of industry, majorly 1 or 2 companies take away the entire market share. Because अगर कोई थर्ड प्लेयर आएगा, राइट, वो बोलेगा यूजर को कि तू मेरे प्लेटफॉर्म से खाना ऑर्डर कर, बट ज्यादा होटल वाले यहाँ पे खाना सप्लाई नहीं कर रहे, ज्यादा वैरायटी तो जोमैटो पे है, तो वो यूजर यहाँ पे आएगा नहीं. अब अगर ये प्लेटफॉर्म वाला कोई होटल वाले को बोलेगा तू मेरे यहाँ से भी खाना डिलीवर करवा, तो होटल का सप्लायर बोलेगा तेरे प्लेटफॉर्म में कितने ऑर्डर आते हैं दिन के, उनके पास बायर तो मेजर है नहीं, तो होटल वाला यहाँ पे नहीं आएगा. इसलिए कोई थर्ड या चौथा बंदा ज्यादा खड़ा नहीं हो पाता. दैट इज यू विल सी दैट जोमेटो एंड स्विगी आर बेसिकली ओलिगोपोली इन दिस इंडस्ट्री. दोनों लोग मिलकर ही मेजर मार्केट शेयर ले जा रहे हैं. दैट इज वाई बेसिकली इन सच काइंड ऑफ इंडस्ट्री in over a period of time, market share of 1 or 2 players increases, and it broadly goes towards 45-50% each player, and majorly they control 80 to 90% of market. So that is why a systematic assumption that 1 or 2% increase in market share can come was taken here, right? So a 42% market share might go to, let's say, 44 in the coming year. That's it. Okay. Now, GOV is basically something that अब 28,000 करोड़ का टोटल इंडस्ट्री में खाना ऑर्डर होगा जिसमें 44% शेयर अपना होगा. सो व्हाट विल बी आर प्लेटफॉर्म्स a total ordered food value? Nothing but 28,000 crore into 44. Look here, right? C4 into C3, C4 into C3, right? This particular thing will give us a value of the amount of food ordered on our platform. That would be 12,375 crore. Okay, simple. Now, जोमैटो के प्लेटफॉर्म में जो खाना ऑर्डर होता है, राइट, उसका तो मेन रेवेन्यू तो होटल वालों का है ना, ये तो खाली एक बीच का कट लेते हैं. So that cut is basically called as percentage of gross. Okay, so Zomato generally takes 21% cut. Like अगर 100 रुपए का खाना ऑर्डर हुआ तो 21 रुपए Zomato के पास जाएगा. Nothing major changes here. अगर इंडस्ट्री में बहुत कंपटीशन ज्यादा आया, Zomato, स्विगी जैसे और प्लेटफॉर्म्स खड़े हो गए, तो Zomato वाला होटल वालों को अपने प्लेटफॉर्म में अट्रैक्ट करने के लिए अपना कट कम कर देगा. सिंपल एज दैट, ताकि होटल वाले उनके पास टिके रहे. बिकॉज अगर एक होटल का 100 रुपीज का खाना ऑर्डर होता है, लेट्स इमेजिन जोमेटो वर्सेस कोई अदर प्लेटफॉर्म पे, और जोमेटो खाली उसका 15% रखता है, तो होटल वाले को 85 रुपीज मिलता है, वर्सेस कोई और प्लेटफॉर्म वाला अगर 20% कट रखता है तो 100 रुपीज के ऑर्डर पे बायर पेज 100, आगे होटल वाले को खाली 80 मिलेगा, 20 बीच में जोमेटो का कॉम्पिटिटर रख लेगा, और सेम 100 रुपीज का ऑर्डर अगर जोमेटो से होता है तो होटल वाले को 85 मिलेगा, बिकॉज जोमेटो अपना कट खाली 15% करेगा। द काउंटर फिनोमिना हैपेंस अगर बाकी सब कॉम्पिटिटर्स फेल हो जाते हैं, तो खाली लिमिटेड प्लेटफॉर्म बचते हैं ऑर्डर डिलीवरी के, तो सारे बायर्स वहां पे शिफ्ट हो जाएंगे। तो अब जोमेटो वाला बोलेगा कि बॉस मैं तो मिनिमम 25% कट रखूंगा, और होटल वाले को खाली 75 मिलेगा। सो फ्यूचर में ऑर्डर का 20% ही जोमेटो रखेगा और 15% रखेगा, और it will go to 25%, depends on industry's competitive scenario basically, because it's pretty much very clear that only Zomato and Swiggy broadly are able to survive, right? The websites like Food Panda, etc., have practically died. So we have kept 20%, broadly speaking, 20.5 or 21%, the current level that Zomato charges to hotel restaurants would be maintained broadly. Okay, so 12,375 crore का total food order होगा, इसमें 20.9, 20.5, 21%, राइट, जोमेटो वाला अपना कट रख लेगा। तो ये कट जो होगा ये होता है एग्जैक्टली द रेवेन्यू ऑफ जोमेटो। सो सी हियर, okay, so what we have done broadly here is the industry size multiplied by 44%, right? That will be the amount of food ordered on Zomato. This multiplied by 20%, 21%, the cut that Zomato takes, that will be Zomato's top line. So you see here how from industry growth rate we derived Zomato's top line, and how factors like industry competitiveness, a characteristic of a business model like network effect came into picture. Now, this is what I meant when I started this session, that you need a deep understanding of how the business and industry functions. Otherwise, look in front of your eyes. यार आप कंपनी के 4 नंबर फोरकास्ट नहीं कर पाओगे, पूरा का पूरा P&L, बैलेंस शीट, कैश फ्लो, बिजनेस समझना, उसका वैल्यूएशन लाना, उसको डिस्काउंट करना, ये तो बहुत दूर की बात हो जाता है यार। ये तो खाली अपन 4 नंबर की बात कर रहे हैं एक कंपनी के अब पूरे पूरे बिजनेस एनालिसिस के अंदर। सो अंडरस्टैंड व्हाई यू नीड टू रीड अ लॉट अबाउट business model of companies. So this is coming back, this is how we derive the revenue of the company. Now we need a detailed understanding of what can be the company's margin in future, correct? All right, like I explained in earlier part 2, that after deriving the industry and top line of a company, we need understanding about the margins of the company. Now currently Zomato was loss making, and as business grows, and because this is a technology based company, we could clearly see that बहुत कंपनी के खर्चे ना फिक्स कॉस्ट होते हैं नेचर में, वो ओवर अ पीरियड ऑफ टाइम नहीं बढ़ेंगे। सो इफ आई गिव यू अ वेरी सिंपल एग्जांपल, imagine top line of a company is 100 crore, okay? Out of that, cost of a company is, let's say right now it's 120 crore, and company is having a loss of 20 crore. But out of this 120 crore, approximately let's say 50 crore cost is, or 60 crore cost is fixed cost, and 60 crore cost is variable cost. Now when revenue of company grows from 100 to, let's say, 150 crore, this 60 crore of fixed cost won't grow, it will remain as 60. The remaining 60 crore will grow as a proportion of top line. So see, this 60 crore was approximately what, 60% of top line. 60 crore divided by 100 crore, 60%, it was variable cost. So 150 crore ka 60% will become what, 90 crore. All right, this will be variable cost. So the profit of the company would be now 0. If I calculate the profit margins of this company, earlier the profit margin of this company was negative 20%. See, loss of 20 crore divided by 100 revenue, that's your net profit margin. But now it will become 0%. Can you see the margins are improving? So this is what a lot of startup guys and equity market guys mean by economies of scale or operating leverage. and only some businesses have such characteristics. Technological based platforms are one of the business which has such characteristics. When I take a detailed session on operating leverage, I would explain with real examples how to figure out this fixed cost, variable cost, etc. This is just explanation of concept right now. So based on this understanding, we thought that abhi losses are negative 25%. Come back here, guys. You should focus here right now. This margins would, improve, or that means losses would reduce. It will go approximately by, it can go to 18-20%. You can never be very precise, right, with forecasting. Just be approximately right, then precisely wrong. Okay, when you are thinking about forecasting numbers of a company. So we came out to this particular math that the operating profit of this company would be nothing but revenue multiplied by margin, right? Approximately 480 crore. Now, because you are making losses, there won't be any tax that the company will have to pay. So, जो आपका earning before interest and tax है, वही आपका earnings after tax होगा, right? That would be broadly your profit after tax. Simple as that. Nothing else. Now, what additional step that we need to understand is a very important aspect that we need to understand in order to grow revenue, right? So in Zomato's case, like here, okay, the annual revenue went from 1994 to 2589, and the company's GOV, total, value of food order, went from 9500 crore to approximately 12,500 crore. अभी जो incremental business आया है from 0 to 0.1, ये without investment तो आता नहीं है. So we need to calculate a ratio called as sales to capital ratio. Correct? And capital means, please go and visit our session number 5 and 6 of business analysis series itself, where we have actually explained what is technically reinvestment, right? So you take in the denominator fixed asset plus working capital of the company, and you take in the numerator revenue or GOV, whatever parameter you are tracking. And you calculate this ratio for the last 5, 7, 10 years. So you broadly come to a conclusion. Let's imagine if company's revenue is 100, and in denominator fixed asset plus working capital is, let's say, 200. That means 1 by 2, that means 0.5. What does this ratio indicates? कि अगर आप 1 रुपए का कैपिटल बिजनेस में डालेंगे, because capital generally gets invested into fixed asset and working capital बिजनेस के अंदर, अगर आप 1 रुपए का टोटल कैपिटल प्रोडक्टिव एसेट्स में डालेंगे, दैट इज फिक्स्ड एसेट प्लस वर्किंग कैपिटल, तो आप आधा रुपए का रेवेन्यू कमाएंगे. करेक्ट? सो व्हेन वी कैलकुलेटेड इट फॉर Zomato, राइट, historically it was coming out to be very low, 0.2, 0.3, 0.4 ऐसा. But because it was a startup, correct, स्टार्टअप्स को इनिशियल पीरियड में बहुत ज्यादा पैसा लगाना पड़ता है टू बिल्ड एसेट, अपने आईटी सिस्टम्स बनाने के लिए. करेक्ट? इनिशियली उन लोगों को रेस्टोरेंट्स वालों को अट्रैक्ट करने के लिए थोड़ा ग्रेस पीरियड देना पड़ता होगा कि कोई बात नहीं, जो हमारा कट है वो आप हमको थोड़े टाइम बाद चुका देना, राइट? सच काइंड ऑफ सिस्टम. तो मनी गेट्स स्टक इन बिजनेस, बट ओवर अ पीरियड ऑफ टाइम एक बार आपने आईटी सिस्टम बना लिया करोड़ों का, राइट, जो कि आपके ऑर्डर्स वगैरह मैनेज करता है, उसके बाद खाली वो सिस्टम का इंप्रूवमेंट कॉस्ट आता है, नॉट बिल्डिंग कॉस्ट. सो दिस नंबर गेट्स इंप्रूव्ड क्योंकि रेवेन्यू बढ़ रहा होता है बट एसेट उस स्पीड से नहीं बढ़ रहे होते. दैट्स हाउ स्टार्टअप्स फंक्शन. But in a mature manufacturing kind of company, this ratio generally stays in a range. It can be 1.2, 1.3, or 0.7, 0.8. All right, like in a very asset heavy company like Steel Authority of India, this ratio has stayed around 0.5, 0.4, 0.6. मतलब 1 रुपए के एसेट पे 0.5 रुपीस का रेवेन्यू. In again asset heavy companies, but a bit less asset heavy, this ratio, like in PI Industries, which is an agrochemical company, this ratio has stayed around 1.8 or 2 times. That's okay. But it depends from business to business. So in Zomato, we could see that the current sales to capital, that is also technically called a lot of time asset core turnover ratio. You can use any term you want to assign that. it's like, ki current 0.3 tha, but it will improve slowly and steadily. It will go to 0.7, 1.2 to 2.5. Now you can never get such numbers right? This is pure approximation, pure judgment. हो सकता है नेक्स्ट ईयर शायद ये रेशियो 0.5 पे आ जाए और अगले साल डायरेक्टली 2 पे चला जाए. But while you are assuming, you are trying to forecast, you go with a reasonable range. That is why you cannot go right quarter on quarter or year on year. But if you are thinking in the right direction, kahan ye ratio reasonably badhega, you will be right in a 3-4 years time frame broadly. So that's a very important thing to, let's imagine we keep a reasonable assumption of K ratio 0.7 jayega. So how do this number work then? कि अगर आज से एक साल बाद जाके अगर सेल्स टू कैपिटल रेशियो 0.7 का होगा, ओके, सो अपने पास ऑलरेडी कंपनी का रेवेन्यू तो है. सी हियर वी कैलकुलेट रेवेन्यू. सो 2589 के रेवेन्यू पे डिवाइड बाय कैपिटल, दिस रेशियो वुड बी 0.7. So what will be the total capital invested in the company? C will go here, 0.7 will come here, cross multiplication, 2589 divided by 0.7. This will be a total capital. In short, total core asset of fixed asset plus working capital. So simply we have, put that formula here. So look here, column number C, row number 13. This is the cell I am at. See this 850 number. I will open the formula now. So see, this 850 is calculated as nothing but, I will, come up with, the exact thing we have done here. So here we have directly calculated the incremental capital that company will have to invest. So broadly, what we have done is, see here, 1 second. So company's revenue is 2589 expected at the end of first year. Company's current revenue is approximately 1994. But up 2589, I will take round figure, right? 2600 ले लेते एक बार के लिए. 2600 minus 2000 at 0.0. So your company will generate almost 600 crores of incremental revenue. Okay. अब incremental revenue कमाने के लिए कंपनी को incremental capital भी डालना पड़ेगा assets में. What would be that? Incremental revenue divided by incremental capital. This ratio has to be 0.7 na, practically. Sales to capital, but here we are talking about incremental sales in numerator. तो denominator में क्या आएगा? Incremental capital, additional capital जो business में डालना पड़ेगा. So we can simply do 600 divided by 0.7. So that number would come out to be broadly approximately 800 to 850 crore. मतलब अगर Zomato को आने वाले साल में, how to interpret that? Please listen carefully. If Zomato wants incremental revenue or 600 crores or more revenue in the coming year, Zomato in the coming year will have to invest 850 crores back into the business in form of fixed asset or working capital. Now guys, that is called reinvestment. Okay. Now broadly, you have companies NOPAT, right? You have companies basically net operating profit after taxes. उसमें से if you deduct broadly reinvestments of company, you get nothing but as free cash flow of company, right? This is what we have obtained here. See here, net operating profit after taxes minus reinvestment. And these are the free cash flows that you practically discount. You forecast them over a period of time and you discount it to get the value of the company. This is technically called top-down approach. But did you see few things? बस कहने के लिए नाम है टॉप डाउन अप्रोच, बट आप कंपनी के बिजनेस प्लान्स के बारे में भी बात कर रहे हैं. आप कंपनी एसेट्स कितना बढ़ाएगी. यू आर टॉकिंग एट बोथ मैक्रो लेवल एंड माइक्रो लेवल, बोथ इंडस्ट्री एंड कंपनी लेवल. सो इट्स जस्ट नेमिंग, इट्स जस्ट अ पैटर्न ऑफ थिंकिंग दैट इज कॉल्ड टॉप डाउन. कि यू कम फ्रॉम इंडस्ट्री टू कंपनीज फ्री कैश फ्लो, दैट्स इट. लेकिन टॉप डाउन का मीनिंग कुछ ऐसा नहीं होता गाइस दैट वी स्टडी इन थियरी, राइट? कि इकोनॉमी बढ़ेगी तो कंपनी कितना बढ़ेगी. दैट्स प्रैक्टिकली नॉट करेक्ट. दिस इज एक्चुअली द मेथड ऑफ टॉप डाउन. So I think we'll end our session number 7 here. Okay. So when we talk here about, our blog 106. Okay. So we have covered 106 first part, that is top down approach. Now in coming, session number 8 of business analysis, we'll talk about the bottoms up approach. Okay. And as a conclusion, there are few industries in which, such kind of top-down approach makes more sense, where the growth rates of companies, the incumbents currently, is mainly due to industry growth rate. Because industry इतना fast grow कर रहा है, the companies within that industry is able to grow. So it's very important to have an idea कि पहले industry कितने का हो सकता है, because the entire growth is coming from industry growth. Just imagine for time being, while people are shifting from internal combustion engine, normal petrol diesel engines, to electronic vehicle engines, why are EV companies able to grow? Because suddenly EV industry as a whole is growing. So first you need a very firm idea over ये industry कितने करोड़ का हो सकता है आने वाले 4 या 5 साल में, because वहां से ही आपको एक कंपनी का मार्केट शेयर के थ्रू रेवेन्यू मिल पाएगा. Okay, so there are few industries in India which are majorly growing due to overall industry tailwind. के इंडस्ट्री में ट्रैक्शन है, कंज्यूमर का बिहेवियर बदल रहा है, कंज्यूमर वो इंडस्ट्री के टुवर्ड्स टिल्ट हो रहे हैं, लाइक जैसे कि ऑर्गेनाइज रिटेल, लोग लोकल किरानों की दुकान की बजाय डी मार्ट या बिग बाजार जैसे बिग ब्रांडेड रिटेल स्टोर से सामान खरीदना प्रेफर कर रहे हैं. सो दिस इज अ कंज्यूमर बिहेवियर जो कि पूरी कंट्री का चेंज हो रहा है, जिसकी वजह से ऑर्गेनाइज रिटेल इंडस्ट्री ग्रो कर रही है. तो उसकी वजह से मेजरली हर कंपनी को ही ग्रोथ मिल रही है ऑर्गेनाइज रिटेल के अंदर, right? Like insurance industry, everyone has become aware of taking insurances now, especially after COVID. People understand that sudden life disturbing events hote hain and you need protection, right? Otherwise you cannot have so much of money if some owning member of family passes away due to some unfortunate event. So suddenly insurance industry has started growing. There are a lot of such industries, asset management industry, consumer durable industry, excuse me, diagnostic industry, where the companies are majorly growing due to industry-led tailwind. So in such industries, if you are analyzing any company which belong to such industries, I think the preferred pattern is the top-down approach pattern. And one example like Zomato, we just did right now. Again, there the top-down approach would be a better approach. So with this, guys, we'll end our session number 7 of business analysis. And as usual, guys, I would request everyone, please go to our YouTube channel, subscribe that. We are actually putting in a lot of effort to teach, concepts from complete practical point of view, like how a practitioner thinks, so that all freshers, people who are studying their CA, CFAs, MBAs, actually learn from it and build their resumes and become great investment bankers or venture capitalists or equity research analysts in their career. If you are in love of short quirky content but yet valuable content, please go to our Instagram handle. We go by the tag Finacle_Shah. You can follow us on Instagram. If you like to read short threads, crisp content, not detailed long forums, you can follow us on Twitter. We go by the handle Finacle Academy. And I would be happy to see you back in session number 8. Thank you so much.